Good morning, everybody. It's Friday, May 16th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, July corn up 2 at 450 and a half. July soybeans are down a penny and three quarters at 1049 and a half. And July Chicago wheat was down a half at 532 and a quarter. And a couple things here this morning. Yesterday we had crush, came back at 190.2 million bushels. That was higher than the estimates. They were looking for 184.6, so that was a good sign there. Oil stocks, however, were higher than expected at 1.5 billion. They were looking for a number closer to 1.4. So I guess we'll kick it off here this morning, guys. Put a bow on the week. I guess a lot of the focus here the last couple sessions has been really heavily focused on kind of the bean oil market, the RVO, thoughts and proposals. A lot of rumors floating around, and obviously they're worth what you pay for them. But if a number was closer to like 4.65 versus what they were kind of looking at, a number in the 5.25 or thereabouts kind of a number. I mean, obviously it's caused a pretty sharp reaction in the oil markets, which has spilled over, it feels like, into the bean complex. So I guess, Justin, maybe just a few comments to wrap up the week. I know obviously we've talked ad nauseum about the oil market, but I guess give us your take. If you did come in at kind of a 4.65 number or something thereabouts, like what does that overall mean? Obviously less demand in that sector, but is it total game changer, big deal for beans? I mean, what's your thoughts?
Yeah, I mean, we talked about this a lot. To your point, it's unfortunately just really based on politics right now. But to me, the important things are whether it's obviously 5.2 is better than 4.6, right? That's pretty obvious. To me, it's what I was encouraged by is what feedstocks are allowed. I think that's the big one. I talked about this yesterday, but if you're going to let 4 billion pounds of used cooking oil come in to satisfy those numbers, that's a much bigger deal than the 600 million pounds that we're talking about. Difference on a mandate. It's if it's 4.6 and it has to be U.S., it's wildly bullish. Or even if it's Mexico, Canada, U.S. and it prevents used cooking oil from going into Mexico, then to the U.S. Any versions of that where it has to be a certified feedstock from one of those three countries, then it's wildly bullish. Regardless, in my opinion, regardless if it's 4.6 or 5.2. Now we've had, a really big move in oil meal, multi-year lows, oil share multi-year highs, another way to say that. So it was vulnerable, right? Kind of going in with a lot of optimism, and this happens a lot. And I, kind of talked about this yesterday, but you're at the mercy of a headline or a rumor. You can have rumors and stories come out that are never verified, and no one ever gets in trouble if it's completely wrong. So it's pretty frustrating. And I know it's not just our markets. That's what we focus on the most. I'm sure it's happened in stocks and lots of other things constantly. And it's gotten worse with social media, and there doesn't seem to be a good, when Ben and Brian were on the floor back in the 50s, that would throw you in jail for going around spreading rumors like that. Now it's just like commonplace on Twitter. So
Yeah.
Of
all the things they look into too, it's like you'd think that can somebody figure this out? I guess obviously they're making too much money. Somebody's making too much money.
Yeah.
So
yeah,
it's crazy. Ben, you just got about 25 years older, but what's on your mind this morning?
Yesterday was a market that probably had gotten a little crowded, got some bad headlines, and the 4.62 number came from an executive at one of the large grain companies, and I don't think that particular company has a lot of interest in crush, and I'll leave it at that. So it's throwing darts and the market catching onto it, and little bloated, algorithms catching hold. I mean, we had some great exports of oil earlier in the year, and talking to some other people in the industry yesterday afternoon, they kind of felt like really nothing has changed a ton in that complex, and you got to sort out the trade for a few days when you have that kind of a move on who's going to stay, who's going to go, and who winds up getting stuck in the end. So we'll see what happens today with it. It's fairly orderly trade last night over there, relative to the previous day. So we'll see what happens. I think corn and beans still, although it's been a very good start, I think that there's going to be some question marks there as we digest the fact that we've gotten off to a good start, ample moisture, no real problems. By and large, I know that there are some issues in Ohio and Indiana, but we'll see. I think there's a lot in front of these markets. And when you throw in the headline risk and the possibility that we could be structuring some positive deals, when you look at corn and soybean projections, which at this point, that's all they are, those projections could become obsolete really quick with some aggressive trade deals. So.
Yeah, very good. Dustin, put a bow on the greens for us for the week here, bud.
Just watching old crop, new crop corn spreads. They seem to have made a pretty hard bottom, at least short term here. It was an interesting time for that to happen too, right? It was like not correlated with first notice at all. But July actually went back to a small carry to the December contract for corn. And now, as we end this night session, we're back up to, pretty sizable inversion, 12.25 cent inversion. So we've rallied 14 cents in just a few days off that spread low. And, you just look at that WASDE report. You look at the export sales that we had this week, huge sales to South Korea, Mexico, and Japan. We still have a ton of old crop demand, and we're not that far away from pipeline. Like if we have one miscalculation on, a stocks report, getting down to 1 month usage for carryout, I think we have chances for some support in the market. I think the spread's just telling us that right now. So now we get to the very end, and we end with a 1.4, 1.5 carryout, and every demand side is satisfied. Yeah, that can go back to a decent sized carry. I generally think that happens closer to first notice day in June.
Yeah, it certainly felt like the July contract was the big long that had to get flushed out. So it felt like a capitulation when we traded down to those levels, because that was a definitely, and we talked about it, very maybe apparently oversubscribed trade. Kind of the one certain thing in corn was that old crop corn spreads would be tight. So that just felt like that was a get me out trade when it went from basically here to negative, 2 under. That just felt was big volume, kind of just margin call type feeling. So I agree.
It definitely felt that way. Yeah, it's like we'll see in the COT report today what the funds did, but it felt more like liquidation than someone trying to get into a trade.
Yeah, and I think even it might have even not been the funds. It could have even been commercial longs. It could have been just knowing that it was going to be tight and just having too much ownership on paper, because the basis was strengthening. In the East, which is I know the West basis got weak, but the Eastern basis is really what our futures contracts based on. The river system. So even made less sense that the futures did it. With the Eastern basis going up, right, Ben?
Yeah,
wasn't it getting pretty spicy there?
Correct. And then we saw, in the last 4 or 5 days, we've also seen Western corn basis improve, and there's some pretty lofty numbers being thrown around here for people to part with their last bushel. So I think that there's maybe now that, much like how we had a purge in bean oil, we had the purge in corn, and I think there's possibilities there on that spread again, especially if we move into early June and the weather forecast pans out to what people are talking about, and things will clamp up over here pretty quick. There's still going to be corn planted in this area in early June, would be my guess.
Are guys starting to nose in a little bit, Ben, or where they at?
What's that?
Give us an update. I mean, just we've heard about slowness in the East and stuff. I mean, give us kind of a geographic, like where guys are rolling and what you're hearing.
In Northern Ohio, more planted than Southern Ohio. Southern Ohio has quite a ways to go in corn, I think. Maybe at least I would say on average, they're probably maybe 30% planted. It's been hit or miss also on the eastern part of Ohio. When you talk about an arc around Columbus, it's rain, 2 days in the field, 2 days to dry, rains again. So they're chasing. You talk about eastern Indiana, pretty much down the entire third of the state. There's been a lot of moisture. I'd put that at, just talking to a couple of customers, probably 40-ish% planted, 35. Northwest Indiana has been better. Terre Haute's been wet. So all these pockets all over the state have some issues with planting, but it's moving along, but it is just a long, drawn out process.
Yeah. And then I think kind of Northwest Illinois is wrapping up, right, Justin? I mean, for the most part, guys are.
Yeah, I mean, we're done. We've got a couple seed corn fields that we just haven't got the green light to plant. So we're done with everything that we can plant.
Yeah. And
it's been pretty ideal.
I was gonna say, throw really some water on it now too.
Yeah, super good conditions. 0.2 to 1/2 inch rains the whole time. So yeah, it's looking really good there.
Very good. Rylan, give us the end of the week rundown on cattle and hogs for us.
Well, cattle was another bloodbath. I mean, that was an $8.65 break so far since we kind of put in that sweeping key reversal. So liquidation wasn't as heavy as expected. Only 2,048 contracts, a commitment kind of getting taken out here. But cash markets, you can't keep them down. 218 to 220 in the south. It's about $1 lower to $1 higher. And in the north, 229 trade for live and 358 for dress. So it's about $2 higher. So even with this kind of weakness on the board, kind of a surprise that Packers really weren't able to get something. So that is a little bit of a glimmer of some hope, I think, overall. And just looking at history, the last time this kind of a break happened, the last time we made this kind of formation, break really lasted 5 sessions and then fully recovered. So I'm not saying that that's going to happen again, of course, but I think everybody's kind of grasping at straws here, trying to, deny that this could potentially last or get a lot uglier. So no, beef prices were good again. Choice was up 54, select up 333. So I mean, we're still, beef prices are obviously very high, but nonetheless, you got guys calling for a seasonal top up here. I think for the hedged, it's more of a sit back and wait. And obviously for the guys that are speculating on the long side of the market, going to get a little nervous here. So I wouldn't doubt seeing a test to that 40-day moving average in the next several sessions. But like I said, there is some glimmer of hope here from the cash side of things. It's just a matter of if the futures are going to acknowledge that or not. But on the hog side, a little bit more optimism there. Open interest was up 6,500 contracts. We're starting to see cash prices start to improve here. Cash was up $1.18, and meanwhile bellies, on an $8 rally yesterday, and carcass almost up $3. So I mean, the news is still pretty good. It looks like there's a lot of positive demand optimism just going into the next several weeks, and hoping to get some of this maybe pent up demand on the export reports start to pick up here. So that's what we'll be watching for next week. But otherwise, been a good week for hogs, not so good for cattle.
Very good. Appreciate the update. It is Friday. We've made it to the end again, guys. Well done. It's everybody's favorite time of the week. Brian's Fun Fact Friday. What do you got for us, buddy?
Thanks, Dan. Happy Friday, everybody. Since we live in such a litigious society, I thought let's look at some of the frivolous lawsuits through the years. We'll start out with the trap burglar lawsuit. A man in Pennsylvania broke into a home, got stuck in the garage after the garage door malfunctioned. He was trapped in there for 8 days, survived on dog food and Pepsi. So he ended up suing the homeowners and was awarded $500,000 for unsafe conditions, even though he was trespassing. Unbelievable.
Dog food and Pepsi.
Yeah, it's a good mix. I'm sure, Rylan, you've dabbled in a little of that.
I'm going to break into Rylan's garage this weekend.
Yeah, so that was a good one, I thought. And then the next one, a man sued a dry cleaners $54 million after they lost his pants, claiming that the signs in the shop promise satisfaction guaranteed and same-day service. He ended up losing the trial, but the cleaners had to spend $100,000 in legal fees, so defending themselves. So that was a crazy one. Next, we have an inmate tried to sue himself for violating his own civil rights by getting drunk and committing crimes. He argued that his own negligence led to his imprisonment. He sought $5 million and wanted the state to pay for it because he was a ward of the state. The court dismissed it, and it gained widespread notoriety for its ridiculousness. We'll move on to Subway that we're all probably remember. A guy sued Subway because their footlongs were only 11 inches long. They were agreed to a $520,000 settlement, and Subway vowed to improve their measurements.
They paid? Oh my!
Oh, wow.
Yeah, isn't that crazy? And lastly, the well-known Mickey D's hot coffee case. When the 79-year-old lady spilled the coffee in her lap, she was awarded $2.86 million. Obviously, if you guys all remember, it later turned into a Seinfeld episode where, Kramer said, the coffee's hot. Well, it's supposed to be hot, but not that hot. And then, got the burn. Then he was about to
use the bomb.
Yeah, the maestro gave him the bomb. Who gave you the bomb?
Yeah.
So instead of
screwed Jackie Childs over.
Yeah, I'm assuming Jackie Childs probably was a lawyer on all these cases, but so yeah, just a look back at all these crazy cases in our history. So hopefully, just be careful out there and have a great weekend, everybody.
Very good. Thanks, Bry. Just came into the open. We got July corn up a couple, 4.50.5. July soybeans up 3 cents now. 10.50, 4.5 is the last. In July, Chicago wheat is down 1 3/4 at 5.30 3/4. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. It doesn't cost you anything to do so, and it'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. We hope everybody has a great weekend, and we look forward to talking to you again on Monday.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.